This video is brought to you by FXCM. Open a $50,000 practice trading account by clicking the link below.
I thought this was actually a good day to talk about news that matters and news that doesn't. I noticed some interesting trends in the news. Whenever there's a week where things are a little bit light, you'll see traders begin to, or you'll see analysts begin to dredge up some somewhat speculative comments to start the day every day because there's not much to talk about. So for today's a good example. There was a few things to talk about. We were getting ready for oil numbers to come out. There was some interesting comments made by Trichet, and the GDP revision was also out, but nothing so shocking. And this week and last week, we saw a lot of buzz about every day saying that the futures were indicating that stock prices would open down. Well, that's interesting because it's one of these questions about, well, is that information useful? So let's talk about what that actually is. So the chart that I'm looking at right now, this is actually the S&P 500 futures contract. Okay, now it looks very similar to this. Not much of a change, right? This is the S&P 500 index itself, so very, very similar. But if we look at these on an hourly basis, you can kind of see what it is exactly that they're talking about. So I actually brought this up as a half-hour chart. This is the futures contract. And you can see what happened since the market itself closed, per se, and overnight session, and then boom, all of a sudden in the early morning in North America, we get this decline. So we get this this move down, and all of a sudden all the analysts are coming out and basically stating the obvious, which I know is a tendency for all analysts, including myself, to do sometimes, and saying, well, the futures are down, therefore, when the market opens, it's probably going to be down as well. But is that useful information? Is it even accurate? By the way, the probability is very low that they're actually right. It's almost random. So by the time the market is opening, so this candle right here that you'll see, this is kind of that transition candle. This is where the market was still closed. The S&P futures were open, though, which they're open basically 24/7 or 24/5. And so that overnight session is about to end, and the morning session is about to begin, which, as you can see, we get this pop up. So all the analysts are saying, oh, well, futures are, the market's poised to open down because the futures are down. If we look at the S&P index, we get a very different, on the half-hour basis, we get a very different picture. This looks very different. So you can see on the 28th, the market closed, and then subsequently, when we opened on the 29th, so today, we get this immediate pop-up. We don't have that overnight session. So what happens is that the information becomes has a real lack of usefulness. Looking at the futures every day to see whether or not the futures are up or down is very dubious, actually, as to whether or not the market itself will open up or down. The probability is very close to random. But the second thing is, well, what if they are right and the market does open down? Does that give me any information that I can use? Because you would automatically infer from that, well, if the market opens down, it's likely to continue moving down. Well, the probability of the market actually opening down and then closing again lower than it opened is right around 50%. So it really doesn't add any value to your analysis. And I get questions about it all the time. Now, why does this matter to Forex traders? Well, because we care about equities. It relates to what's going on in other higher risk strategies, or higher yield strategies is what I should say, like short yen positions, so the dollar yen, for example, which is performing quite well today, as we see just the risk environment in general beginning to calm down quite a bit. We got yesterday, for example, the yield spread difference between government bonds and LIBOR was at a a very low level, so not seen for quite some time. So we're interested in what's happening with equities because we're trying to determine, well, how safe is the short yen position right now. And if we see that equities are likely to continue falling, which is the implication that we get from that news article, then we might be more inclined to manage risk against short yen positions, or even enter long yen positions. So it's just one of those things that we take a step back when you're looking at the news and determine, well, Does the analyst have any ability to? The news is one thing, but do I have any ability to do anything about it? And does it have any predictive value? So, for example, whether the futures are up or down before the market opens has no statistical relevance to whether the futures will continue, whether the market will continue to move down or continue to move up, or will even open up or down. And today is a perfect example of that, where it's just kind of a nonsense announcement that they do to fill space and time. However, by contrast, there are other announcements that do matter. So today is actually a good example. We got the oil numbers, and we saw a very large decline in U.S. crude oil inventories. Well, there's an implication here with that decline as to what traders think about the future of oil prices. Well, I've shifted gears here just a little bit to talk about what this impact is. So traders are, or not traders necessarily, but the industry itself are reducing inventories potentially, and probably the culprit here is that they anticipate the prices are going to be lower in the future. So why pay the high prices today to build up your inventories if you think that it's going to be cheaper in the future? Because that's basically a penalty if you pay a high price today to build up your inventory when you think that prices are going to be lower later. You've got that's traders are going to respond to that, which you can see happening here on one of the commodity currencies. So, for example, the Aussie dollar. We've got. We can look at another great example actually with the Norwegian krona. You can see here has actually lost 479 pips to the dollar. Now, of course, the exchange rate here is not quite the same as talking about like the pound or the euro, but still, big move. And we can even see this behavior. We can even see to a certain extent some of this happening, or some of this news affecting the Canadian dollar. Initially, we had a big push down towards support, and then this big whipsaw right back up to the top. So we've got the dollar getting a little bit stronger. This news is going to be very supportive for equities. That's good for the short yen positions. It's bad for commodity currencies. So in a diversified portfolio, it helps us to understand, well, where should I be pushing most of my risk control? Should I be buying puts against long positions on the Aussie, for example? Or should I be potentially even reducing my exposure on the commodity currencies if this is something that looks very reasonable? Should I keep my eye on it for the next couple of days and see what happens if I've got a long-term position in the commodity currencies? Well, that's exactly the kind of news that's helpful for us to start to understand what's going on in in the industry that has a primary impact. Trade and imports of energy has a primary impact on currency prices, on the growth potential in equities and other higher yield assets. So it's information that has some practical application, because right now we can say risk just went up in the commodity currencies and probably is going down in other currencies or in other strategies like a short yen or even a short franc position. Bottom line, don't weight all news as equal, because it's definitely not. And one of the best litmus tests is just to think about, well, is this the kind of conclusion that a trader could reasonably come to? Because if a trader couldn't use that information or rely on that information, then the potential is that the analyst is just filling up time and space. So be discerning with your news. Otherwise, you're gonna treating everything of equal importance is a great way to whipsaw your portfolio and your trades.
This video is brought to you by FXCM. Open a $50,000 practice trading account by clicking the link below.